Do you have the windows open? Maybe close the windows. It's not? Are you sure that one behind you looks open?
No. All right, we're live, I think.
Meeting is now streaming, and that's what it says.
Meeting is now streaming. All right, folks, this is not a stream about landscaping. It's an unfortunate situation that we've got a little video bombing happening in my backyard, but let's not mind that. Let's focus on what we're here for, which is to talk to Anh Boesch. Say hi to Anh.
Hi, everyone. Thanks for joining.
Anh is a real estate agent here in Montgomery County, Maryland. She is the first real estate agent I met when I moved down to this area 9 years ago, something like that.
Yeah, about.
And so we're excited to chat here on this Friday afternoon and talk a little bit about what's happening in real estate right now while we're all kind of stuck at home, and things are still happening, right, Anh? Are things still happening?
Things are still happening. Things are, obviously a little slower. Listings, though, are still coming on the market, and buyers are still out looking. Obviously, within the last week, been a little different with buying, with buyers having to somewhat, not necessarily put it on hold, but really having them look at the properties virtually and look, really concentrating on certain areas. Like if you are right next to the road, are you going to hate that? Looking online really to kind of see if it's appropriate to go out, because right now it's really not the best time to go out looking at homes. So it's almost like, unless you're really going to be writing an offer like 95% sure on a home, then those are the type of situations then you're going to want to be going out. But if it's just because you're bored, you want to browse, that's not a good time right now to just go casually looking at homes.
Are you guys using virtual means of showing the homes in the meantime?
I am. So over this past weekend, I listed 2 homes like within the last 7 days. And
wait, so people are actually listing homes in this environment?
I am. Well, so good news is one is actually going under contract, so.
Wow, nice.
On Sunday around 5 and got an offer. And so on Monday or Tuesday morning. So we're just going back and forth right now, just finalizing all the, signatures. So, buyers still need to buy. And, I think something that you had posted, or maybe it was Draper and Kramer had posted about, there's just less competition right now. So for buyers, if you need to buy and you find that house, then it's a good opportunity because you're not competing. So, and the same thing with sellers, right? I mean, we have a lot of what you're seeing right now. It's a lot of properties that are still listed as coming soon, or they are, listed as temporary off. So those situations right now for a seller, if you're priced correctly, you have competition as far as, inventory and other sellers. So, it's both. If you need to sell, you're going to be looking, sellers should be on the market. But, it is one of those, again, just the same thing as far as buyers, some buyers are just wary of, buying at this moment. So if you're, have a stable job, and I think you can speak to that as far as the lending aspect. And, we're still finding buyers that are ready to, make an offer. So.
Cool. So, are you concerned about what might happen if this sort of uncertainty drags on for a bit? Like, what are you projecting here for the coming months?
Projecting. Well, I mean, I think you're going to still find, the spring market. It's just now going to probably be more of a summer market. I mean, I think everyone, is, I think most buyers and sellers, will come back to the market, obviously, once things, once people start working again. I mean, there are plenty of people that are still working. So that is one thing just to keep in mind. Work is still going on with a lot of companies. So it's not like everyone's shut down all of a sudden. And
this area is unique in and of itself, right? I mean, the DC metro area, one of the reasons I moved down here in 2011 was because this area is so different than the majority of the country in terms of job stability and insulation from, bumps in the road in the economy.
Correct. And that is one thing. I mean, we have a lot of, government workers, and they still are working. And, it obviously it depends on where, what their jobs, entail. But, contractors are still working. People are still hiring. I know it sounds weird, but just depending on what your industry is, people, I had a neighbor that said that her husband switched jobs, which is unusual during this time and the uncertainty, but the other opportunity that he was presented was, probably going to be more stable. So, again, it just depends on what industry, buyers and sellers are in, really. But this market obviously is a little bit more insulated because of the government.
What are you advising your, prospective buyers who are like, maybe concerned about doing anything right now, putting things on hold, just very skittish about making an offer at this point or making a move at this point? What's your advice to those folks?
I think it's the same thing as far as if you have a stable job, and it's secure and you find the right house, if you find the right interest rate, if the opportunity presents itself and it, checks all the boxes, I think people should be moving forward. Obviously if you're hesitant, with your employment status and things of that nature, then maybe you'd want to, pause, obviously, because, if you are thinking that you might get furloughed or situations like that, then, your finance is going to fall through anyways, right? So, again, I just think it just depends on the buyer situation.
Got it.
Competing. So I would just say I had, we were in a situation with one buyer and they had, that's 300 to 400,000, it's very challenging, right, in this marketplace. And it's not like they were asking for a huge mansion or anything. It was just, they had, they were pretty basic and they were still competing 3 to 4 or 5 offers, on every home that they wanted to put an offer in on. And it doesn't matter what, they weren't going to waive contingencies of that nature. They were going to be smart about it. But we had escalation clauses and 2 of them, and it still didn't matter. We still got outpriced. So it just, I think it just depends on really what the buyer's qualifications are. So move forward is really what I'm saying.
Okay, good. So to the audience, again, apologies for the background noise. Totally did not plan to have landscapers here while we were doing this Zoom, but it's okay. This is real life, right? This is really what's going on these days. All kinds of, I've got kids over there who are trying to log on to Montgomery County Public School classrooms. I've got landscapers. I had a plumber come before, taking big precautions, of course, but this is life, right? Got to keep moving forward.
Yep.
So one other thing that's happening in my world is I'm doing a lot of home buyer education via Zoom, and I think that's a really great. Right now is a really great opportunity for home buyers to start planning and preparing and learning about the home buying journey, especially if they're not moving as quickly as they originally thought they would. They've got maybe a little more time on their hands, basically to do some educational classes. And that's something that I've been doing a lot in the last couple of weeks in particular, getting acclimated with Zoom and doing that, showing a presentation that I have. Actually, I'll share with you right now if I can manage to do this. Let's see here.
Sure. Are you finding that borrowers are taking your advice and trying to get ready for the home buying journey?
Absolutely. I think nobody's hesitating about learning, right? Everybody really wants, especially if it's going to benefit them in some way. And in this case, the more that you kind of learn up front and the more you prepare yourself financially, the better the outcome is going to be. The happier you'll be with your financial decisions and your choice of home and your choice of financing, and perhaps you'll get a better monthly payment than you otherwise would have. There's a lot of little things that you can do in just a short period of time to get a better deal on your financing. You can take steps to budget better. You can take steps to improve your credit score. You can take steps to change your debt ratio. You can get yourself in a more liquid position, asset-wise. So all these little things could do a lot to get you better numbers in just a couple of months.
That's what I was going to ask. How long do people are starting to make these changes? How long does it normally take to affect, the credit scores? 2 months?
Well, yeah, I mean, I'm still trying to share the screen here. Are you able to see what's going on my screen?
Yeah.
Oh, you are? Okay, good. So you see this screen right here? The home buying stages?
Yes, with the little balloons, 1, 2, 3, 4, 5.
There you go. There you go. I mean, so what I do is kind of really focus on number one, stage one, learning, planning, and optimizing financials. And to your question, you can fix a credit score in as little as a week or 2 weeks with the right advice and with the right guidance. I'm not a credit expert, but I do have access to tools that predict what your credit score, and predict very accurately what your credit score will go up to if you make certain moves. And so that's one thing that people can do. And then also just a general conversation about how to manage their their credit items during the next few months. I mean, a lot of that stuff can raise your credit score, 10, 20, 30 points. So anything that you can do now during this stay-at-home period, right, could be to your benefit.
Right. So what are your, are you seeing any of your borrowers kind of pull back from making that home buying purchase?
I've seen people kind of ask a lot of questions, inquiring about whether home values are going to be soft soon and maybe they should wait a little bit. I did have one client who exited their purchase contract because they had a concern about selling their departure residence because they were moving up.
Right.
And their original plan was to take their time to sell the property, fix it up first and sell it while they were buying the new property. But their concern was, what if we are stuck holding on to the house for, a decent period of time, more than they expected to. And so that's the kind of stuff. And I think those are valid concerns. It's really just a question of talking through the circumstances of every individual person's, life and house, right? Different markets and different circumstances will have a different answer.
Right. And I think that's probably one of the things where if you have a buyer that is in a rental situation, either renting, I think the buyers that are also the home seller, are the ones that are kind of pausing at the moment, because they're nervous about actually selling their house. But I think, if you have a buyer that's not, reliant on a home sale, then those are the buyers that are more active in the marketplace at the moment.
Right. That makes sense.
What are you seeing as far as rates?
Good question. Rates are kind of very, very volatile and all over the place. So those who follow the rates, are seeing on even an intraday basis, rates might be great in the morning and by the afternoon be terrible.
Right.
So
what terrible? Like, what are rates right now?
Well, okay. So right now, the sweet zone to get a good interest rate are loan amounts in our area below $510,000. Mm-hmm. And 15-year loans in particular are priced very nicely. 30 years are fine as well. Above $510,000 is considered high balance conventional loans. And those are pricing a little off lately because the market and demand for those size mortgages diminished. And then above 765,000 in this area is considered jumbo. And the jumbo rates are okay, but they've become more restrictive in guidelines. So it's harder to qualify, basically. All right. But let's be specific, right? Let's be specific. The lower loan sizes are seeing 15-year rates in the mid twos, which are amazing. 2.6, 2.7, 2.8 are commonly quoted 15-year fixed interest rates.
Okay.
30-year fixed in the 3.2, 3.3 range. And these are for the best qualified individuals, right? So high credit scores, generally above 740, and not necessarily with a ton of equity, though. And this is something I want to emphasize to home buyers. And I sort of try to dispel this myth very early on. Your interest rate is not necessarily dictated by your down payment. You can get the same low interest rate with 3% down in most cases as you would if you put 20 or 25% down. And so really the more important thing is, do you qualify for the program, right? Do you have the high interest rate, the high credit score, and do you have the strong debt ratio, meaning you don't have a ton of debt relative to your income. So those two factors matter the most. And then there's an added little benefit for people who are earning less than $96,000 a year. Those people can fall within a special program called Home Ready or Home Possible, and those have even better interest rates.
The Home Ready, is that, you said 96 as combined income?
Whoever's on the loan application, 96,000 and
Combined,
below.
yeah.
Yeah, combined
Right.
or individual, right.
Okay.
Okay.
Okay, sorry. So where did you say right now the ones at 510 and below are falling around?
In terms of rates?
Yes.
15 years in the let's say 2.6, 2.7 range. 30-year fixed in the 3.2, 3.3 range.
What about VA and FHA?
So those programs have been very volatile also. Same situation, the lower loan sizes, we're seeing pretty decent interest rates still. 30-year fixed for both types of government loans. By FHA and VA, we're talking about government agency loans, right? So you're looking around 3.0% for well-qualified people.
Oh, okay. That's still good.
That's very good. The high balance stuff is out of whack. But so again, below 510, that's where the sweet spot is right now.
Good to know. Okay.
So, that's the other thing. You can take advantage of good interest rates during this period as well, which is nice. It makes a more expensive house feel less expensive. And so even if the home prices per se don't drop as much as someone might hope for, they're still getting the benefit of the lower interest rates.
Right. And I think that's what a lot of people kind of are thinking, that, the market prices will go down. But I don't, from everything that I've heard and read about is, we're in a different position than we were back in 2008 and 2009, where, the loans that were made back then were riskier. And that's where, you saw like the big crash. Whereas now, the purchasing power and people's incomes are a lot higher that have purchased recently. So, prices, they're not really anticipating to fall as drastically if they do. But I don't foresee that happening. Inventory is just too tight right now.
Yep. And in the same vein, some people are expecting interest rates to drop dramatically further from their current lows, right?
Right.
And so I want to comment on that really quick, because I think that's a false assumption as well. And I'm going to take a step back. Just a few weeks ago, the Federal Reserve dropped the federal funds rate, which is the rate that's sort of mentioned on the news, down to 0, right? And all these people sort of thought that the mortgage rates would drop to 0 also.
Right.
Those two things have no connection whatsoever. And the Federal Reserve's movements, their actions are usually lagging in terms of what the mortgage interest rates are doing, because the mortgage rates move in expectation of what the Federal Reserve is going to do. So when the Federal Reserve dropped rates for maybe the third or fourth time in the last several months, the market's already expected it by and large. Okay, so mortgage rates had already dropped to their relative low points. The thing that's also occurring, though, that's keeping rates from going further down is that the U.S. government's taking on a lot of debt. Right? All these stimulus packages, which are costing $5-7 trillion or more, is basically being financed by debt, U.S. debt. And so investors in mortgage-backed securities, which drive mortgage interest rates, they want higher returns. They want higher yields because these are risky assets now, right? It's a riskier proposition to invest in these types of bonds. So the risk premium is higher, and therefore mortgage rates are not going down. They've stabilized in a certain range, basically. Still a lot of volatility, but they're not really going down as someone might expect them to, given the Federal Reserve's drop in interest rates.
Right. Okay. And so then the other question actually that I have is, I had another person that contacted me about someone that they knew that they couldn't get a loan because lenders and banks weren't loaning money. So can you speak to have there been any challenges? Obviously you're still closing loans, right? There's, what is, if there are any delays, which I kind of know, I'm going to set the question for those that don't, potentially what, hiccups or, are you seeing delays, things of that nature? What is it closing potentially?
Yeah. Okay. Again, folks, sorry for the background noise. We've got the leaf blower right outside my window here. The windows are not open. It's just, I guess they're thin windows. I don't know, but they look pretty new. But they're landscaping, and sorry. So I'm trying to scream over them. Some lenders have had issues, okay? First off, there's something called the non-QM lending world, okay? Non-QM, basically, it means non-qualified mortgages. It's basically the non-standard mortgage stuff, okay? So basically, loans that kind of opened up new lending possibilities to people came about in the last few years under this guise of non-qualified mortgages, okay? And bank statement qualification as opposed to qualifying on a pay stub or a W-2 or a tax return, that's among them. All kinds of different programs meant to allow investors and business owners to qualify for lending, okay? Those programs have all but dried up. Okay. And unfortunately, we have seen people lose the opportunity to purchase a home in the midst of the process because those types of programs dried up. Okay, so yes, that kind of stuff has occurred. Some lenders have stopped locking rates as well. That's happened the last couple of weeks because of the overwhelming demand for refinances. That sort of overwhelmed their system. Also because of volatility in interest rates. Basically, lenders are sort of absorbing all of the recent changes and all of the recent demand for refinance activity and the volatility in the secondary markets. They've absorbed this by trying to slow things down. And so some lenders haven't taken locks recently or have raised interest rates arbitrarily. In other words, by raising their own profit margins to slow down the tide. So those are the kinds of things that I've been seeing. But structurally, this is not 2008. Mortgage companies are not going out of business. Mortgage companies are not running out of cash, at least not right now. That does not appear to be an issue. Mortgage banks are doing well enough to persist. There's enough sort of measures in place to prevent a liquidity crisis. And the Federal Reserve and others have acted quickly enough during some dysfunctional periods over the last few weeks to not let the mortgage market seize up and drive companies out of business.
So as far as refinancing at this moment, is it still a good opportunity? Are you seeing that people are still putting in applications for refis?
Yeah, absolutely. So rates were basically plummeting for a, I don't know, month and a half or 2 month period leading up to about 4 weeks ago.
Right.
The last 4 weeks, it's been really crazy, right? It's been a bumpy ride. And so people have been a little more tepid about refinancing. People are trying to, but every time they look into an interest rate, it seems to change within a matter of a couple of hours. So it's been a little difficult, plus the lenders have slowed things down. But yes, the answer to that question is for sure, folks who have interest rates that are in the upper threes and above ought to look into their options. Whether it's shorting the term to 15-year and going into the twos, that's a great deal, right? If you have the capacity to afford a higher monthly payment, you're going to save a ton of interest by doing that.
Right.
Or possibly going into low threes on a 30-year basis.
Low threes. It's pretty good.
Yeah, again, dependent on loan size,
Right.
a lot of other things, but yes, absolutely, absolutely good. That doesn't mean everybody should refinance. Everybody should at least look at the options and see what the break-even point is in terms of their savings versus the cost of refinancing. Because if their break-even point is too close to the time frame that they think they'll sell the house, right? It really doesn't make sense. Or if they've already paid into their mortgage a number of years, it might not actually make sense to refinance and start over on a 30-year term.
No, that makes sense. That makes sense. Yeah.
So I mean, I think this is good stuff. I think there's still a lot of activity, and the most important thing from my perspective is if you have any sort of thoughts on purchasing a home at some point soon, or if you want to look at improving your existing mortgage situation, you ought to talk to us and learn and sort of get educated on what your options are and what are the steps that you can take to prepare yourself if you're going to buy a house, right? What can you do right now to prepare yourself for that eventual purchase?
Right. And I'm also, one of the things that we were talking about doing things virtually is, sharing like through Zoom, helping buyers kind of go through homes without actually going through them. Right. So that's what we were talking about previously, was about doing things virtually. Right. So the listing that I had that went live last weekend, I did have a virtual open house. So people were able to log on, ask questions. I could walk them through the house. And then I actually did, that was, an open house. And then the following day, I did have a buyer that contacted me and wanted to do a virtual tour because, the pictures only say so much, right? So she actually wanted to see more of the backyard. So I was able to, go on Zoom and then be able to walk through the backyard with them. So that was good. But I mean, as far as buyers that we're not actually maybe going out to the home, but we can go through listings and kind of select homes to kind of go through, because obviously pictures are a little bit more difficult to gauge, but it's a lot easier, if we're doing it together. And then again, if we're narrowing down homes that maybe we're going to go see with the 95% possibility of making an offer on one of those homes exists, then, we can kind of, delete or, carve out the ones that we're not, she's not going to be interested at the end of the day, or he, the buyer is not going to be interested in due to whatever we find on the screen. Right. So, and I know a lot of times it's hard, you have to kind of go see things, but, there's certain things like when you're working with a buyer, one of the things is kind of really understanding what their needs are. And then if, trying to eliminate any of the ones that are maybe not or not a viable candidate for, for doing that well in advance is something easier to do, and you can do it on the screen. So. Excellent. Virtual is the way to go right now. So.
It is. So we should have some continuing discussions like this, some sort of basis. I don't know, maybe semi-monthly or something like that, and keep folks engaged and aware of what's up.
Yeah, and then if anyone whoever's watching has questions, they should, they probably can comment, right? Comment on the Facebook.
I hope so. Yeah.
Post, and we can circle back with them, and hope that just everyone stays well and inside for at the time being until we get through this, and it will pass. So
it will pass.
Stays healthy, and wash your hands.
You were in commercial lending back in the 2008, 2009 period, right?
I was, yes.
And I was in residential lending, and it felt really harsh and difficult during that period, but
yeah,
we got through it. It passed, and things came back.
Yeah, they did come back. So it's one of those things where I think we're in a different position as far as residential is concerned, and it will pass, So we're definitely, I think the measures that they took back then for loans, for approving loans and so forth, help set us up now that we're not going to see the same declines that we did back then. So
there you go.
There's inventory, and again, the spring market will now just be the summer market, but there's still homes that are on the market, and sellers and buyers are still selling and buying. So
yeah. And it was great talking to you.
You too. Thank you.
Yeah. All right. Have a great weekend, and I'm glad we caught up, and everybody out there, we'll talk to you again soon.
Bye, everyone.
Bye-bye.